Okay, so we're going live with Nuvini. I'm going to give it a couple of seconds for the audience to populate before we kick it off. Okay, so good morning and welcome to the Sidoti Virtual Microcap Conference, and thank you for joining us today. I'm Anja Soderstrom, Senior Equity Analyst here at Sidoti. And next up, we have Nuvini Group Limited, and with me today I have Pierre Schurman. He's the founder and CEO, and this will be conducted as a presentation followed by Q&A. And if you would like to submit a question, you can do so in the Q&A function at the bottom of your screen. And with that, I'm happy to hand it over to you, Pierre.
Well, thank you, Anja, and thank you for all of you participating in this call this morning. Great opportunity to share a little bit about my story and about Nuvini and where we're at and where we believe we could go. So I'll go ahead and put the live presentation in a second. I just wanted to give you some context, which I believe is important. Prior to founding Nuvini, I have been an entrepreneur since 1996. I founded Brazil's second largest search engine, sold it to a US listed company called Star Media at the time. And most recently, in 2011, I founded a VC fund called Bossa Nova. Now it's called Bossa Invest, which has been for the past 8 years the most active VC in Latin America, and is actually one of the top most active VCs in the world outside of the United States, according to PitchBook. On that company and that VC, I was a managing partner. I made over 800 investments, had over 100 exits, all in B2B companies, all in Brazil, and that's why Nuvini started acquiring companies in Brazil, is because I had extensive experience in the local market, investing in companies in that market. So I'll go ahead and share my screen. Okay. And here. Oops. And
We need a full screen.
can you see the full screen? No.
No.
No? No?
Now we do.
All right. Perfect. Here we go. And 1 second here to adjust here. All right. Subtitles shouldn't be there, but 1 second. There you go. Perfect. Well, again, good morning, everyone. So Nuvini is a Brazilian-based serial acquirer, and I'll go through a presentation here. I'll go a little bit over our company, our investment thesis, the Latin market, and Latin Brazilian SaaS market, a little bit of an overview and track record, pipeline, and our defined growth initiatives, and comp and team. Basically, we acquire either 100% or on a path to 100% multi-sector SaaS B2B businesses, and very similar to what Constellation Software has been doing for almost 30 years. Vitec has been doing for almost 30 years in different regions. These are companies that are profitable, growing, and cash flow generating, every single one of them, and every single one of the companies we're looking at in Latin America. Our targets are niche leading SaaS companies. I'll give some examples down the road with established business models. So they're not startups, they're not in extremely fast growth pace, but they're very predictable and very strong cash generators. We are different because we are focused on Latin America, accessing a market that's under targeted with interesting capital efficiency. And big numbers, these are in Brazilian reais. If you divide it by 5.5, you come to dollars. We have 20,000 customers. No customer represents more than 0.25% of our revenue. Our organic growth last year was close to 14%. And our EBITDA margin at 26% with a 30% growth. And EBITDA has been growing. I'll give some more details on that. Today we have 7 companies in portfolio, and I'll go a little bit over that shortly also. Our investment thesis is that we're focused on a sizable, addressable market, positioned as a M&A platform, as the only M&A platform focused in SaaS in Latin America right now, with a multi-vertical portfolio already in place and ready to scale the platform, supported by our value creation strategy. Our team has been around since day one, so we have an experienced team, not only in Nuvini, but through other businesses they ran or supported. And we have a really interesting pipeline for M&A. So Latin America SaaS IT market, software market in general, is today a $9.2 billion market, growing at an interesting pace. By 2030, it'll double. And Latin America in the total is $21 billion, and they're growing at a pace that's faster than the rest of the world because it's an underserved market. There's, the companies that we acquire are usually bringing in clients that are migrating from an Excel spreadsheet or a notebook into a SaaS B2B app. Brazil obviously is the big contender, but there's interesting opportunities in different markets. As I mentioned, the revenue from SaaS in Latin America should double between between 9 billion last year to 19 billion. So it's a thriving market, a lot of market penetration, a lot of blue ocean here, and the companies we're looking at are effectively impacting and gaining market share in this growth. A little bit of our companies. So I'll give you 2 examples of companies we acquired. Effecti is the leading ERP that connects small, medium, and some large businesses, but mostly medium businesses, to federal, state, and local government auctions. So when the government in Brazil wants to sell, they plug into an online platform, government platform, and anyone can sell to the Brazilian government at a state, local, and federal level, but it's a complex process. It requires bidding. There's bids. Effecti connects small businesses, like, for example, a cup manufacturer, and allows them to sell to these to the government in a transparent and a direct and an automated way. Last year alone, through Effecti, small and medium businesses sold $13 billion to the Brazilian government. So they're absolute leaders in this segment. The second company here is an example is SS Ótica. They are the leading ERP for eyeglass shops in Brazil. They have 34% market share. In Brazil, different than the US, there are no big chains. So the big chains represent about 15 to 20% of the market. It's mostly mom and pop shops. And then SS Ótica is an ERP that does full service, from the acquisition of eyeglasses to the customer service to the shop management for these mom and pop shops. In Brazil, there's about 60,000 of them. And is a very consistent, cash flow generator and absolute leader in their markets. And there's other companies in different segments. I won't go into everyone because our time is limited. As far as financials, we have been growing consistently, over the past years, and especially I note that our gross profit has increased at a good pace, and our EBITDA margin has expanded because that's part of our value creation strategy, right? So obviously, top line growth is important, although Constellation and Vitec, which are kind of our comps, grow at 1 to 2% annual organic growth, and we're growing about 15%, 14%. Margin expansion is important because we use the cash flow from the businesses to acquire new businesses. So if you look at the chart here, when we're talking about EBITDA, the first 2 years there were few companies in Nvni, and we've been able to expand margins quite a bit, taking EBITDA from doubling the EBITDA margin over the past from 22 to 24, and that's work of development. That's a result of value creation we do within these companies. Big numbers. We filed about 15 days ago. We turned our first operating profit since we started the company. Adjusted EBITDA up 30%, and net cash has increased substantially also because we're looking in ways to better expand margins within these businesses. That's I'll go over to our value proposition for investors is to give investors access to profitable SaaS B2B companies throughout Latin America, starting with Brazil. Have access to a diversified portfolio of cash generating and fast growing companies, or growing companies, if you may. And we are segment agnostic. So we're not a roll up. We're not buying all ERPs or all software companies for the eyeglass shop market, for example. We're agnostic because our main driver for a decision on an acquisition is what is the predictability what is the diversification and how consistent is this revenue. So we have 92% recurring revenue, and out of all the 24,000 clients we have, no client represents more than 0.24% of revenue. So it's very diversified, very consistent, and very predictable. And that's why we acquire these types of companies, and we'll continue to acquire them, being agnostic in segment. So that's how we look at these companies, and that's how we believe we generate value for our investors. For our founders, we support, these founders are profitable companies. So you may ask yourself, why would someone sell a profitable company? Simply because they've been running these companies for 10 to 15 years, making money, but they really haven't captured the lion's share of the value for building and enduring to build sustainable business. We are the alternative for selling. There's obviously other alternatives, but we do this in a very different way. We don't fire anyone. We don't hire anyone. We're not a private equity firm that's going to come in and slash costs. So all these margin expansions have maintained most of the team, all of the teams of the company, be founders of the management. And we're able to do that, to create value through different ways that are valuable for founders, right? These companies are all founder-based and first-time founders most of them. And the founders see that see them as their baby, their creation. And having been a founder myself, and I'm still founder here at Nuvini, but now as an acquirer and investor, I really relate to that, and I believe they understand and relate to that also. Talk a little bit about pipeline. Different than the US, which is a very competitive market. In Brazil right now, interest rates are at their highest rate since 2006. They're at 14.5%. They're about to go up another half a point or maybe a full point to the highest, I believe, since like 2001. And that creates a lack of liquidity. Also, since 2021, there has been no IPOs in the Brazilian stock market. And now I'm talking about tech. There's no IPOs in the Brazilian stock market. And over 10 companies have delisted. So we have like a negative stock market in Brazil. It's a really unique situation. And there's no horizon, there's no short-term horizon for IPOs in Brazil, let alone for software company IPOs. That creates a unique opportunity for us to acquire, which was very similar to what the market was when I started Nuvini back in 2019. So our acquisition criteria, as I mentioned a little bit, is SaaS B2B. They're not on premise. There's real SaaS companies, so recurring revenue, as I mentioned. Think about something like open API. So there's a monthly billing on it. Low attrition, low churn, positive cash flow. Our companies are within the rule of 40. If you look at SaaS, they're all within the rule of 40. Very good leaders that have founded solid companies and been doing that for quite some time. The leaders stay on board for the companies through the earnouts, and then we help them build management to keep running the companies. And with an annual target revenue of 10 to 30 million reais, so anywhere between $2 and $6 million in revenue, we're acquiring companies that are pretty much the same size. That allows us to diversify the risk. So there are very interesting acquisition opportunities at higher revenues and EBITDA and cash flow, but we're very disciplined to continue to acquire companies within this spectrum to ensure we're diversifying the risk and not concentrating in any specific sector. The way we acquire companies is through a mix of cash. That cash could be from cash flow of the companies, cash in the company, or debt that we raise, through seller notes, and when the stock is at a price that makes sense, through stock. The mix of all three. Our main driver and decision is we have an internal hurdle rate of 31% IRR. If the company passes that hurdle rate, then we try to understand what's the best mix that allows us to improve that and to keep allocating the capital that we raise. Our playbook post-acquisition, as I mentioned a little bit, is pretty straightforward. The founders are very good at building companies, focusing on strategy, focusing on growth. And then on one end, we work together with them and bring some advisors to help them continue to do that. And then I'd say so a lot of autonomy there. On the other end of the autonomy range, we've been audited since day one. We're audited by Grant Thornton. We run Oracle as part of our reporting system. So we're very rigid with things that are governance-based and that allow us to report as a listed company and allow us to have consistency on the information that we have. And then when you look at people, we help with talent acquisition. We bring in playbooks that allow the companies to reduce employee churn, and I believe that that's been an important part of the value creation that we have been able to do so far. As I mentioned in the beginning, to give you an idea of comps, if you look at the comps that are in the market, they're much bigger than us. We're very much at the starting of Nuvini here. But if you also look at the multiples, we're extremely discounted compared to these comps. Obviously, we have a long ways to go, a lot of work to do. Very much focused on growing the business on the long term, and part of that is done because we have an incredible pipeline. I spoke personally to over 2,500 companies since I founded Nuvini, and because of my previous life, if you may, as a founder and as an investor of many SaaS companies, that gives us a really privileged pipeline. Today we have 29 companies that are qualified and analyzed. That means that we know what we would pay for them if we were to acquire them today, that have $100 million in revenue and $32 million in EBITDA. And more importantly, we have deals in negotiation, which are in different stages of closing, of 37 million $37 million in revenue and $19 million in EBITDA. And as you may notice, you probably will notice, is that the EBITDA margins of the companies we're talking to now is higher than ours because we're raising the bar. We used to acquire companies with lower EBITDA margins, and now we have an optionality, and we're working and focusing on acquiring companies that would have higher EBITDA margin and are converting that EBITDA into cash. Right? We have a 72% conversion ratio from EBITDA to cash. So this is not inflated EBITDA. These EBITDA turns into cash and that's really important because it's an important milestone, KPI for us, and that's what we have on right now. And obviously, we wouldn't be able to do that if we didn't have a great team. Apart from myself, my co-founder has over 20 years experience as an operator of different tech companies, as an investor also. And we have a management, a board that has different experiences. Scott Klossner has private experience with private and public tech companies. Marcelo Gonçalves is the managing partner of Domo. Domo is the #2 VC in Latin America right now. Bossa Nova is still the #1. I'm no longer in Bossa Nova since 2019. So Marcelo has a very interesting view into the current market conditions for tech and investments. Marco Leone was, until recently this year, Latin America Vice President for OpenText. Prior to that, he ran Computer Associates, has a lot of enterprise sales experience. And João Leite was CTO for Itaú for almost 20 years. Itaú was the largest private bank in Latin America. So we have a different board with complementary experience that's part of the decision process, not only to analyze companies, but to help implement growth strategies as we go along. And that's basically it. Thank you very much for your time. And now I'll open to Q&A.
Thank you, Pierre. That was a really good overview. And for the audience, if you would like to participate in the Q&A, you can submit your question in the Q&A function at the bottom of your screen. And we have a couple here already populated. So for the year, you did one acquisition out of 4 that you're planning. Are those sort of planned already, or are you working on those? And when can we expect those to close?
So I put on the letter that I put out in the beginning of the month, I shared that information. We have 3 deals in closing right now. And we have the pipeline that I mentioned earlier. We have a total of $32 million in revenue and $19 million in EBITDA that are in different stages of closing. So.
Okay, and you're planning 4 deals this year. Is that sort of the pace you are gonna keep in the coming years, or?
So Nuvini itself, when we talk about acquisitions, Nuvini acquires companies directly, but our companies will acquire companies also. So although we won't acquire all the eyeglass ERPs, all the software companies, our company could do that. So when we say 4 to 6, we're talking about, I would say, almost like the divisions that will become divisions over time. our companies are looking into other opportunities which I don't have visible or couldn't detail right now.
Okay. And another question here, what multiples are you paying for acquisitions, and are they typically all cash deals?
I can give a range. We pay anywhere between 4 to 6 times EBITDA for acquisitions. And the deals, as I mentioned in the presentation, depends, they vary. Right now, we won't use stock, I mean, because it will be dilutive, and I don't want to, as the largest shareholder in Nuvini, I'm very skin in the game. I don't want to dilute everyone along with me. But we use cash or seller notes. That's how we have structured these deals, usually with a bonus or an earn-out to incentivize founders to keep performing for 3 to 4 years.
Okay. And another question is, what's the average interest rate of the debt that you currently carry?
14.5%.
Okay. And another question here, you have done well expanding the EBITDA margins. Is there further upside from where they are currently, or?
So I believe there's a possibility of expanding EBITDA, and that has come primarily due to, I'd say, a new factor or a new fact, which is AI. And I don't like to talk about AI because a lot of people just oversell AI so much. But there's definitely some efficiencies that we could bring to customer service, to sales, that should have some impact in the business. And also, we should be able to actively start doing cross sales, which prior to having, being able to do our own data set and LLM were very costly and ineffective. So I believe we should be able to continue to expand margins. I believe so. Again, can't promise, and just
Okay. And we talked about this before the presentation about your reporting. You report on an annual basis, but that's that's going to change. So I just thought maybe we should share that with
So
investors.
as a foreign private issuer and as an emerging growth company in NASDAQ, we're only required to report annually. We spent a year trying to get our gears in place here, and we just reported full 24. Our intention is, and we will report first half of 25, and then at the year end, full 25, or beginning of 26, full 25. And after that, we will scale up to report quarterly.
Okay. And another question here is, what would you say to current shareholders to ease concerns about current share price and NASDAQ compliance?
So there's two parts to it. I think NASDAQ compliance, due to the share price, gives us until October 18th for us to reach at least $1. Historically, we've had the same challenge last year, and we were able to surpass it. So we'll keep on working. I can't talk about stock price, obviously, but it's not my place. We'll keep on working to deliver value, and hopefully the market will understand that. And as I just showed in our presentation, we're severely discounted to our peers. And hopefully the market understands that, investors understand that, and they come on board and we work together to get there.
Okay. And are your acquisition targets exclusive negotiations, or are they deals that are being shopped around?
Exclusive negotiations. Every single deal that we're talking is an exclusive negotiation.
Okay. And we sort of touched on this, when your next acquisition might take place and when can we expect to hear news about it.
I can't, unfortunately, I can't share that. We do have, as I mentioned, and I believe I said in the letter, we have 3 deals in closing status. So ongoing closing.
Yeah. And then another question here. Okay, that one was deleted. And why are the multiples you pay so low for such high margin cash flow companies? That's another question there.
Because if you look at the Brazilian stock market and you look where interest rates are in Brazil, the leading tech companies in Brazil listed are trading at 9 times EV/EBITDA. That's why. If a listed company, the leading company in Brazil called TOTS is trading 12 times EV/EBITDA. That's cost of capital is high. And that's basically why. And that's exactly why we listed in the US, because we can arbitrage that difference.
Okay. And again, if you would like to participate, you can submit your question in the Q&A function at the bottom of your screen. And for the acquisitions you make, do you have financial targets that you target to reach within a year or so, or?
I can't disclose future projections,
Okay.
but again, we're looking at companies doing anywhere between $2 million and $7 million. So that's as far as I can go.
Okay. And in terms of the macro environment, how is that playing into sort of your strategy?
By macro environment, U.S. macro environment or
Yeah, both
Brazil?
US and the Brazilian, I guess.
Right. So in the beginning of the year, I would say that the question was only addressed to Brazilian macro environment, which is kind
Yeah.
of stable. And curiously enough, now it became addressed to the U.S. market, which in January I thought was unthinkable. We're very comfortable given that, if you look at the persistent cash flow that we generated last year and what we've been able to do historically, we understand that over time markets will understand and recognize what we're doing. And on the buy side, obviously, the instability, if there were to be instability in local markets in Brazil, that would actually create a greater opportunity for us to acquire more companies at better structures.
Okay. And another question here is, would you consider making larger acquisitions if they make sense and are attractively priced?
So right now, no, simply because where we're at, we're able to do more acquisitions of smaller companies and that they're in different segments and diversify risk. The temptation to do, we've seen great deals of companies that they're doing 40, 50, $60 million in revenue, but it would concentrate too much risk. And we're probably, if we continue to execute it and we continue in our execution line, if you draw a line there, probably by the end of next year, we will be able to acquire larger companies. So we started acquiring smaller companies. Over time, we'll acquire medium companies, and then eventually we'll have the problem that Constellation has, which is they have $2.8 billion in the bank, and they have to allocate that capital. We're not there yet. So right now we're very disciplined in acquiring smaller companies.
Okay. And another question here. You said cash or seller notes will be the form of capital you use. How much cash is currently on hand?
We just disclosed cash on hand on our filing 15 days ago.
Okay, we have one last question here. What do you feel the market is missing in terms of understanding your story?
Well, I think there's three things. First, we didn't get visibility in numbers. We were late in filing, and that obviously didn't give visibility, and that's obviously an important part. Second, is that some people do not understand Constellation Software, Vitec, Roper, and Tiny, which is a Canadian company that's very similar to ours. So they think we're a software company, and we're actually capital allocators. And if you look at the historical trajectory of those companies, then if you believe that we should be able or should be able to execute like that, we are undervalued. We are undervalued compared to those comps. And third, until January, we didn't really have. We weren't participating in events. We were outfaced. We weren't telling our story. So we had a very low volume. In December, November, we had an average of 10,000 shares traded. We started going out and talking to markets and talking to investors. Like I'm here and grateful to be here today. And that gives investors more visibility of what our story and what we're doing. And hopefully over time, if we're able to continue to execute as we believe we will, that will give them understanding of what we're at.
Okay, well, it seems like it's a good story, so I'm looking forward to be following it. And time is kind of up. I just wanted to thank everyone who participated and Nuvini for joining us today. I know you have a pretty full one-on-one schedule, but if anyone who tuned in at the presentation would like to catch up with management, you can reach out to them directly or to us at Sidoti, and we'll make sure we'll set something up for you so you can learn more about Nuvini. With that, I'll hand it over to you, Pierre, for some closing remarks.
Sure. Well, thank you, Anja. Well, great to be here with you. I hope that my story and the story of Nvni is clearer for some of you who didn't know of it, of us, and really hope you support us as we keep executing over time. And what I believe is a really interesting opportunity for Latin America, for investors wanting to get exposure to Latin America. So thank you very much.
Great. Thank you. Thank you, everyone. Have a good rest of your day.